Okay, welcome to this quick video of just me and you chatting about the markets, chatting about investment style, because I have come to the conclusion that in this market, maybe a lot of people call this market broke. We have an overvalued market. We have a concentrated market into the Magnificent Seven, and I understand this. I understand that this is not, in my opinion, like the dot-com bubble, because yes, the weighing of the S&P 500 is allocated with these big top 10 stocks, but earnings come from these top 10 stocks, so you have some reasonable valuation for this one. And I have seen a comment recently on one of my videos talking about Terry Smith's investment principles. Terry Smith is maybe the best English investor at the moment, one of my favorite investors, and he has three key principles when he invests in stocks. One, buy great companies. Two, don't overpay. Three, do nothing. And when I started investing, I followed these exact principles of only investing in quality names. And over the years, maybe I have taken the other route around. And because I have followed David Einhorn into value investing, and the key takeaway is I started investing with quality names, so quality investor, and you can easily fall into the trap of saying everything is overvalued. I will focus on value investing. This is what matters. Maybe I will buy a lower quality business, but I will get it at a much cheaper price. So maybe here is my opportunity. And my recommendation is it's not the same game at all. It's not the same game at all to play the quality investing, and the value investing style is not the same at all. For example, I followed Warren Buffett into Oxy, Occidental Petroleum. I know a lot of big investors, guru investors invest in Oxy. You have Monish Pabrai, you have Prem Watsa, you have Lilu, you have Warren Buffett, obviously. And I have followed him thinking that he knows something about the company. Warren Buffett, or the conglomerate of Warren Buffett, Berkshire Hathaway, has bought 30% of the company, of Oxy. So maybe there is something to play. Let me buy the stock. Since I bought the stock, I first bought the stock in 2021. Now we are at the end of 2024. So far, we've seen losses, and that's it. I believed in the management, Vicky Holub. I think she is great, but the oil and gas market is very difficult. So when I invested in Oxy, the priority for capital allocation was buybacks and dividends, and that's it. And then you wait 1 year and they do a massive acquisition with debt out of nowhere. So yeah, I understand the synergies, etc. But this is not the kind of company that I want to be invested in. I want to be investing in companies that when they announce a plan of buybacks and dividends, what they do for the next 3 to 5 years is only buybacks and dividends. I don't want to pivot too many times. And the problem was not in Oxy. Oxy is a very well-run business. The problem is in the oil and gas industry that is dependent on the oil price. That's purely geopolitical. You have the Permian Basin, you have the OPEC, etc. And I bought Oxy knowing all these risks, but the belief in Warren Buffett was even bigger, was even stronger. So I bought this stock and no gains at all, while the S&P 500 is trading at all-time highs. I am here deep in the red with Oxy. So yeah, that's the first thing I have realized. The second thing I have realized was following Monish Pabrai, into coal names. So there are coal companies in the US, AMR or Consol Energy, or Warrior Met. You have coal miners. These are good businesses, and after COVID, they had a very special situation where they had already signed contracts with agreed upon price and volumes. So in advance, you could know the volume of coal that would be sold in the future and the price. So you can estimate pretty easily the future revenue, the future earnings, future cash flow of this business for the next 12 months, because it was a contract with fixed volume and price. So yeah, you have a mismatch. I bought coal companies in 2023 just after Monish Pabrai explained the investment thesis on an interview, and the stock went up immediately. Immediately, it continued to go up. It was a quick double. I bought AMR, Alpha Metallurgical Coal. It was a quick double. And you know me, I love quality investing. I love to buy and just hold. And the company is getting better and better and better. And it did not turn out exactly like this for coal names. That means I bought AMR last summer. In, I don't know, 6 or 7 months, it was a double, and then it collapsed back to zero. So my patience and my temperament is to buy and hold and do nothing and do something else with my life. But apparently for coal mines, you have to monitor them like the fire, so like oil in the fire. So that's a different kind of investing. Again, yeah, that's what I'm telling you. I started investing with quality investing, and I shifted gradually to value investing, buying. And I mean, this is purely the sector, the commodities. The commodities sector is very cyclical, and I know it. I didn't learn anything out of this process of losing money. For these two examples, for example, either Oxy where I lost money, or AMR where I had a double, I could have sold, and then it went back down, and I still held my position. I still hold my position right now. And yeah, that's not my style of investing. Commodities driven industries move a lot, and you have to monitor them, buy low, sell high, and then worry. And then you have geopolitical tensions, you have China lockdowns pumping, and if you have no China demand for coal, maybe that may impact the coal prices, so that will impact the future contract of the coal miners. That's a complete mess. And I have other examples on my portfolio in the recent years of buys that were not quality investing, that were not compounders, but they were purely value investing. And yeah, as I said previously, one of your comments, so thank you my subscribers, one of your comments highlighted the 3 key principles from Terry Smith: buy good companies at a good price, and do nothing. And I want to shift back to this investing long-term compounding strategy, because this is how I made most of my money. I mean, I didn't lose money with this value investing style. It's just an opportunity cost. It's just that if I did not shift my strategy, I would have made a lot more money. So it's good. I mean, do mistakes, rub your nose in mistakes, record a video about doing the mistakes, so everybody will judge you. I mean, that's good. And after 1 year, 2 years of doing some value investing, I think I will sell all my value investing plays to buy my quality names. This is my temperament. This is what fits my temperament. I don't want to be stressed. I want to buy good stuff and hold and do nothing. That's it. It's all about research, and then you buy something and you hold for 3 years, 5 years or more. I still have my Apple position in my first brokerage account. I bought Apple in 2018 when I turned 18. I still held, and it's 4x, 5x right now. So yeah, this video, the goal of this video is to know yourself. Know yourself, know your temperament, know your circle of competence, know what you're good at, know if you like the detective work of investing, know if you like the buying and selling, know if you like the holding. I'm a holding guy. I like to buy a concentrated portfolio of, let's say, 10 stocks, but these stocks are so good that you can't replace them with other cheaper stocks, even if they are cheaper. the quality is so high that I will never sell these stocks. This is the quality portfolio I want to have. So in the past few days, I have done Excel with my current portfolio and my dream portfolio. And what I have figured out is that in my current portfolio, I have these value investing names: Oxy, AMR, so the coal mines. I have bought also AutoNation, so small car dealerships that does a lot of buybacks. Lithia Motors, small car dealerships. Alibaba, you know how what I think about Alibaba. It's a great Chinese name, but it's not a great compounding engine. It's a value play for China and buybacks. So you have 4, maybe I'm forgetting some. You have 4 names. Already today, I sold my Lithia Motors. I will soon sell my AutoNation. I will soon sell my Alibaba. I'm just waiting to see the effect of buybacks right now. For AMR and Oxy, I may buy them soon. I'm just waiting a couple of months to see if the commodity I think the commodity prices will continue to go up, and I see Lilu buying the stock. So okay, I'm with the camp, with the giant investing, the gods of investing. I'm more confident. So for Oxy and AMR, maybe I will hold a little bit, but I will sell ultimately. For the other bets that I did, I just cited AutoNation and Lithia. I'm selling these ones to use the cash to buy what I'm good at. So that's a good lesson here. Stay in long line. If you're good at buying and holding, stay on your line of buying and holding. That's it. So yeah, I'm using this YouTube channel as a testimonial channel, so you can see my journey live. I failed of teaching good quality compounding stuff, and sometimes I do some value investing picks. So yeah, that's a real lesson here, to be either a quality guy or value investing guy. And I know the reason of it. It's because I started to learn about value investing with David Einhorn. Great value investor, great performance, great picks. I read his letter, value investing. Now you have quality names, but we will focus on value names. PE ratio below 10, and the company seems good, will produce cash flow, and you do this stuff and you turn rocks again and again and again. I tried it. Now I know. I tried it, and it's not that I didn't like it. It's all about opportunity cost. If I just held TPL, Texas Pacific Land, and just bought more TPL, bought more Brookfield, bought more the quality names I have in my portfolio, I would have made a lot more money. So yeah, you have plenty of different styles. Know your style that fits your temperament, and stay in your lane. That's the key advice from this video. Take example for me. Don't do my mistakes of switching lanes, discovering what works, what doesn't work, because that's not you, and you can't do this for many years. That's too not stressful. I didn't stress about value investing, but just that doesn't fit your investment criteria. I mean, I would be happier with the portfolio of, let's say, 8 stocks, but these are the best stocks in the market. My favorite investments that I will hold for years and years and years. I'm very happy with this kind of portfolio. So yeah, that was the point of this video. Stay in your lane and know yourself. Investing is a humbling game, so let us learn, be humble, and continue to compound our wealth for the long term. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a video, a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.